Welcome, ladies and gentlemen, to the Cima Strategic Case Study P3 Complete Essentials Revision, segment number 7, part 2 on internal audit. Let's have a look. Before I get started, a quick reminder on my kind suggestions. Please have a notebook and pen on the ready. You can follow the slides and my explanation carefully. Make notes as you deem necessary. Maintain a list of key topics that you feel you're weak at, so you can self-revise later, and maintain a list of key performance and management tools that can help model answers in the strategic case study exam. A quick snapshot of the core activities here to remind you on that, because they are very important as I continue to remind this to you. P3 relates to core activity D and E, which are evaluating and mitigating risk and recommend and maintain a sound control environment respectively. So these are the two core activities that we are looking at. Specifically, in this segment, we will learn about applying IA resources, part of which was covered anyway in part 1 of segment 7, while you're also going to learn the evaluation skill of the implications of compliance failures. There's a lot of detail with respect to internal audit that we need to be aware of. That is what we are going to look at in this part. To start with, let's look at the types of audit work. As there are many risks and many controls within a business, remember risk categories, there will also be many different types of audit that can be performed. A few examples are here. So when you look at the types of audit work, you have compliance audit, transactions audit, risk-based audit, quality audit, post-completion audit, systems-based audit, management audit, social and environmental audit, value for money audit, etc., etc. Just like the risk categories and the various problems that we face when we manage a company. So let's try to understand some of these. A compliance audit checks the implementation of written rules, regulations and procedures. And a transactions audit involves the checking of a sample of transactions against documentary evidence. A risk-based audit refers to a systems audit in which the auditors use their judgment to decide on the level of risk that exists in different areas of the system and to plan their audit tests so that more effort is directed towards the most risky areas. A risk-based audit. A quality audit is a systematic investigation to establish whether quality objectives are being met. I don't know if you can hear, but some of my friends, my bird friends, are here as usual. I hope they're not a big interruption to you and on the audio. All right. A post-completion audit or post-completion review is an objective and independent appraisal of the measure of success of a project. Usually happens after the project or by the end of the project, but you usually can commission post-completion audits while the initial few stages are over of any investment or a project. Then you have a value for money audit where the auditor assesses economy, looking at the inputs and deciding whether these are the most economical, and efficiency, considering how well the operation converts inputs to outputs, and effectiveness, examining whether the organization is achieving its objectives. Let's look at an environmental audit. There is a standard definition. Let's go through this. It's a management tool comprising a systematic, documented, periodic and objective evaluation of how well organizations, management and equipment are performing with the aim of contributing to safeguarding the environment by facilitating management control of environmental practices and assessing compliance with company policies, which would include meeting regulatory requirements and standards applicable. So basically a whole gamut of things in terms of what to do, why we are doing this, with the aim of contributing to safeguarding the environment by doing what? Facilitating management control, etc. That is a standard definition. You can keep this in mind. No need to memorize it, but please have an understanding that you can conduct environmental audits. Social audit looks at the company's contribution to society and the community. And the contributions made could be through donations, sponsorship, employment practices, education, health and safety, and ethical investments, etc. Then a management audit, which is also known as the operational audit. Cima says that a management audit is an objective and independent appraisal of the effectiveness of managers and the corporate structure in the achievement of the entity's objectives and policies. And a systems-based audit is an audit of internal controls within systems of an organization. Although the term refers to any type of system, it is most often associated with the audit of accounting systems. Now let's take a look at the audit process. So here you have a snapshot of the audit process. You start by agreeing on the objectives of the audit, then you plan the audit, then you find out about systems and controls, then you confirm the operation of the system, and you assess if controls are adequate. Then you move to the testing aspect. You test the compliance with controls and you test the application of controls, which is the testing stage here. Initially planning stage, then you do the testing stage, and finally you arrive at the review, report and recommend stage, which then goes back to or basically connects the cycle where you upgrade and revamp the objectives whenever necessary based on the report and the recommendations. So three key stages: the planning stage, testing stage and the reporting stage. This is the audit process. Now let's talk about audit planning. Audits should be planned. Basically, there should be an audit program for each financial year in which the internal auditors set out which activities or operations they will audit and what the purpose of the audit will be in each case. Objectives of the audit. Basically, the plan must include the objectives of the audit, the conduct of the audit, basically what information is needed and what investigations to carry out. Then the resources and the timing must be planned, how much time and effort will be required. Let's take a look at a risk-based approach to audit planning. Most audits are now carried out using a risk-based approach because you have to prioritize, whereby the auditor assesses whereabouts the key risks are in a system and then concentrates the audit efforts at those key risks. The result of this approach is that the audit should be more efficient and effective at achieving its objectives than if another approach were followed. So when you're approaching it from a risk-based approach, even in the planning aspect, you get to you have a grip on what is more important and what is less important, and therefore you can plan it out in that sense. Let's take a look at the risks related to audit planning now. When you prepare an audit plan for the year, the internal auditors should try to focus on those areas of operation where the potential risk to the business is greatest. Now, one way of assessing the risk is to consider for the operations or procedures subject to audit, you look at the inherent risk. That is the risk in the activity or operation or ignoring the controls in the system, and this risk can relate both to the severity and the incidence of the risk. That is on one end. You're looking at the inherent risk. You're considering the inherent risk of the whatever subject of your audit. Then you look at the quality of control. That is the perceived quality of the existing controls for the activity. Confidence in the quality of control can be affected by the apparent effectiveness of management and supervision. It could be affected by pressures on management to achieve targets, even changes in the system activities and procedures, changes in key personnel, high staff turnover, rapid expansion in operations and the volume of transactions handled, and even the length of time since the last audit of the activity was carried out. So these are some of the considerations that could affect the level of confidence you have in the quality of control of whatever the subject of audit you are planning to investigate. Now let's particularly focus on audit risk. in particular. This is the risk that the auditors might give an inappropriate opinion on something which they tested. That is, they say that a process is well controlled when in fact it is out of control. Obviously, you're going to have a risk, no, in that sense. So let's take a example. If we use the example of auditing the financial statements, audit risk has three components and elements. One is the inherent risk, which is the risk that an amount in the financial statements, it could be for an asset or liability or a transaction, might be stated as a materially incorrect amount, ignoring the existence of the existing internal controls. So if that inherent risk is missed, we have led to audit risk. Then the control risk. This is the risk that the existing controls are not sufficient to prevent or detect a material misstatement of a value in the financial statements. Even if this is not subject to good investigation, you are facing audit risk. Then you have the detection risk. This is the risk that the auditor's substantive tests will not reveal a materially incorrect amount in the financial statements, even if such an error exists. So even in that case, if they miss something material, which is detection risk, which leads to ultimately overall audit risk. Quick note on materiality. An item in the financial statements is material if its omission or misstatement of its value would be likely to influence a user of the financial statements. However, materiality cannot be specified mathematically because it has a qualitative as well as a quantitative aspect. Materiality should be considered in relative terms, and also the best way to look at the materiality is by considering the impact aspect of things. That leads me to the systems investigation and documentation aspect of audit. Auditors will need to ascertain what the system is and also the controls that operate over the system, and document both the system or operation subject to the audit and their findings and judgments. So it's very important that the investigations are documented carefully. In doing so, the ascertaining systems must be looked at. The auditor can use many sources and methods to ascertain how the systems operate. There are some of the example methods that you can use. Here you have flow charts, which could be examined or created from discussions with staff who use and operate systems. Then you have interviews and questionnaire techniques, where the staff who operate the system can describe how they use it, and this usually has an advantage over other system documentation because it identifies how the staff actually use the system, even if this is out of line with the proper procedures. Then you have systems documentation, where the auditor can find the documentation of the system from when it was produced to identify how it operates. And the documentation tends to be best for computerized systems, as they will have gone through a proper systems development approach, and also they tend to be least well understood by users, even though because the developers are the ones who have the most level of familiarity with systems documentation. Still, the auditors can use them. And the observation, the operation of the system can be observed. If you look at the ascertaining controls on the other end, these are to specifically assess the controls in systems. An auditor can use standard control questionnaires. These documents are structured so as to identify all key internal controls and also enable the auditor to assess the quality of the controls. So in terms of conducting an investigation, conducting a systems investigation, you can look at the ascertaining systems and you can look at the ascertaining of controls. These are the two areas that you can undertake. Let's take a look at control assessment. Now, once the auditors have ascertained what the controls are, they need to make an assessment of the internal controls and whether they will achieve their objectives. For an example, to overcome weaknesses in the control system, a number of controls might be applied, such as requiring that all payments are reviewed by a senior manager in the company instead of being paid automatically. A review by the individual supervisor of all bank reconciliations. There could be periodic listing from the company's bank of all the payments out of the bank account in the period or review by a senior manager. Just a few examples of how you can overcome weaknesses in a control system. Basically by further controls or tightening those controls. Now we get into another very important aspect of audit, that is the audit testing aspect. Even in the audit process, you would have realized there is a testing stage, and that is what we are going to look at now. In audit testing, once you have made the assessment of the controls and identified the areas of greatest risk, the auditor can move to the testing stage. Auditors need to carry out tests to ensure that procedures are performed correctly and that controls to prevent or detect errors are adequate and applied effectively. What are the different types of testings we have? So one fundamental types of testing is the compliance testing, which is a test of controls. The test of controls should be carried out to ensure that the controls identified at the planning stage operate as they should. If the controls are not being complied with, then there will be a material weakness in the control system, and the result could be serious errors of fraud, and the business objectives may not be achieved. So this is very important, because you have to understand that internal audit only works as long as people stick to those internal controls. So it really, just because you have the world's best internal control mechanism implemented, you cannot go and tell the world that I have the world's best internal control system, because it wouldn't work. It would be empty if the people don't comply. That's why compliance testing is very, very important. So here the testing is whether the controls are effective and the controls are ineffective in practice, even though they appear adequate on paper. Those are the two elements that you try to look at within the test of controls. Right. But before that, just a quick look at the complete slide. There you go. So the purposes of compliance testing, you're basically checking if the controls are effective and if they appear adequate. Even that you need to flag. The next type of testing which we came across is the substantive testing, which is a test of balances or transactions. Substantive testing, on the other hand, does not look at the controls in the system, but concentrates on the output and ensures that the output is as expected. This testing is normally associated with financial systems, but can also be used for non-financial systems. And the purpose of these tests is either to confirm that the controls are effective, or if the controls are ineffective, to establish the apparent consequences in terms of the objective achievement. Next, we look at sampling. The sampling aspect is testing a proportion of population to gain assurance about the population as a whole. Now, if you consider audit sampling alone, right, because sampling is a very general idea where you look at a small portion. Audit sampling is the application of audit procedures to less than 100% of the items within an account balance or class of transactions to obtain and evaluate evidence about some characteristic of the item selected in order to form a conclusion on the population. So when you are not looking at the entire 100% population of whatever the set of transactions or the class or the set of accounts that you are looking at, but you're looking at a selected portion, then you have audit sampling in action. What are the risks that occur with sampling? As soon as an auditor decides to sample a population, there are risks that are brought into the audit. Obviously, you're going to have the sampling risk. which is inherent to any kind of sampling work. This is the risk that the auditor's conclusion based on the results of the sample may be different from the result that would have been obtained had all the items of the population been tested. The thing about this risk is that it can never be removed if you do sampling. If you do sampling, it's always going to be there. The non-sampling risk is the other aspect, where the auditor may use inappropriate procedures or misinterpret evidence that the test results give. As a result, the auditor would fail to recognize an error. So while that is the case, because this is more on the auditor's part and not the sampling aspect of things, it is avoidable if the auditors use the appropriate procedures. The non-sampling risk is something that we can address, while the sampling risk is going to be there if you choose to use an audit sample. Next, we look at analytical review. Arguably, this is the most important test available to the auditor, as they can be used in the audit of both financial and non-financial items and can be used at all the stages of the audit. Analytical review. Now, what this does is the examination of ratios, trends and changes in the business from one period to the next, to obtain a broad understanding of the results of operations and to identify any items requiring further investigation. When the results appear abnormal, the auditors will investigate more closely to find out the causes by performing further work. So, what does an analytical review involve? If you look at the financial aspect of things here, during the audit of any part of the financial statements, analytical review often involves the calculation of ratios related to profitability, efficiency, liquidity and return. And if you look at the nature of analytical review, you can look at the comparisons of information that can be with prior period or anticipated results, that is variance analysis, and looking at the gaps, right, in terms of the desired and the actual results. You can benchmark, you can look at similar industry information, and you can even use predictive estimates. There you go, a quick view on the entire slide. That brings me to audit reporting. The final stage of an audit is the audit report. In an internal audit assignment, the audit report does not have a strict structure. However, it would be expected to feature a number of different parts, like the objectives, a summary of the process undertaken by the auditor, the results of the tests carried out, the audit opinion, if one is required, and the recommendations for action. When giving a recommendation, auditors must always ensure that the recommendations are practical and cost effective. That is very, very important. The auditor will need to consider whether the residual risk will be reduced by the recommendation. If it will not, the recommendation is not worthwhile. As I explained in the residual risk management segment, sometimes we misinterpret to say that we have done everything that we could. But the idea of internal audit is to come up with recommendations in a way to identify the gaps of the internal control systems, to say, look, you can bring your residual risk down to this level, but currently it's at this level because there are certain gaps. Let's close that gap and bring it further down. So that's why they say that the residual risk must be reduced. If it doesn't, the recommendation is not worthwhile. The internal auditor should have a process of post-implementation review to ensure that recommendations have been actioned by management. So here, the head of the internal audit team will meet with the head of the department being audited and will discuss the points that are being reported. And the head of the department being audited will comment on the points raised, and the comments are incorporated into the report. This makes the audit process less threatening because the departments being audited know that they will not be reported on to senior management without at least having some advance warning and the opportunity to make their own arguments. The circulation of the report is also very important. Typically, the internal audit team would discuss the report with the manager of the department being audited. Once this has been done, they would submit the report for review within internal audit and then provide the audit committee with a copy. The external auditor would also be able to refer to the reports. Normally, we've already looked at it, that the external auditor can tap into internal audit work. And the content of the report would otherwise remain confidential within the organization, partly to avoid embarrassing audited managers whose reputations could be affected by negative reports, particularly if they are taken out of context. So you really don't want the audit report, right, or establish precedent by this year's audit report by antagonizing all the members that you've audited. You don't want to set that precedent. You want to keep it a very participative approach and keep it very inclusive, because then in the future audit reports that you prepare and the future audit process, they will be more helpful and friendly rather than distant and uncooperative. Now we enter a very important aspect of audit, the audit of computer systems. Now, in the case of computer systems, audits are carried out to check whether the system is achieving its objectives. Also, in the case of accounting systems, to check that the information produced by the system is reliable. However, there are several problems for the auditor of computer systems that do not occur with manual systems. What are these problems? There can be a lack of primary records because they are input. There can be encoded data. There can be a loss of audit trail due to various reasons. There can be overwriting of data. Yes, indeed, right? There can be some lame issue, some space problem, some wrong algorithm, some wrong macro written, and the same file, just a simple copy paste and overwriting can completely delete a audit trail. Program controls can be there, and a concentration of controls in the IT department. It could be either misleading, it could be either inappropriate. These are the problems you can encounter with auditing computer systems. What are the errors in the audit of computer systems? When auditors audit computer systems, they need to be aware of the types of errors that occur in the systems. The characteristics of these errors are no one-off errors unless deliberate amendment to individual items. Systematic errors which repeat across all transactions, and higher danger that input errors will not be detected. These are all traits related to the kind of errors of computer systems. There can be one-off, there can be non-deliberate amendments or deliberate ones. There can be systematic errors which are copied across the board, and there can be input errors that could not be or that might not be detected. In such a case, as far as audit of computer systems, what is the audit approach we need to undertake? The audit approach for computer auditing is of two ways. One, round the computer. That is the approach where the auditor does not attempt to understand the operation of the system but treats it as a black box. Now, to audit the system, the auditor matches the inputs to predicted outputs to ensure that the outputs are being processed correctly. That is, round the computer. Now, this approach is good in that it does not require a big expertise, a heavy level of expertise of IT in the audit teams, but it is only suitable if the following conditions are met. What? Computer processing is relatively simple, the audit trail is clearly visible, and a substantial amount of up-to-date documentation exists about how the system works. If these conditions are met, you can do a round the computer audit. But there are problems with auditing round the computer, obviously. Computer files and programs are not tested, right? You don't go into the system because you treat it as a black box. So there is no direct evidence that program is working as documented. If errors are found, it may be impossible to determine why they have happened. And all discrepancies between predicted and actual results must be fully resolved and documented, no matter how small. This is because the controls are being tested. Now, in such a situation, to what extent can you go on to offering all of these details, especially because you don't know what is going on inside the system? And as you know, in general, with respect to computer systems, a key advantage that you have is you can make things look the way you want, even though if someone who is auditing doesn't know how the system internally works, you could get away with things. Because of this, there are fundamental risks around the computer auditing. The second approach is obviously through the computer. This approach actually interrogates the computer files and computer controls and relies much more on the processes that the computer uses. The auditor follows the audit trail through the internal computer operations and attempts to verify that the processing controls are functioning correctly. And the computer controls are directly tested and the accuracy of computer-based processing of input data is verified. And to audit through the computer requires more expertise and a longer setup time. However, this can lead to results that are of very good quality because obviously through the computer you're going through the entire process. What this approach does is it utilizes different computer assisted audit techniques which are known as CAATs, such as test data and audit software. So we will take a closer look at computer assisted audit techniques. So computer assisted audit techniques are methods of using a computer to carry out an audit of a computer system. There are two main categories of CAAT. One is the audit software category and the other is the test data category. So as you can see in the snapshot, audit software checks what computers are good at, and test data checks live data and the dead data. Take a look at them. So fundamentally, in terms of audit interrogation, here on the audit software, you can deploy audit interrogation softwares as computer assisted audit techniques. Audit software consists of computer programs used by auditors to interrogate the files of a client. Normally, the client's data files are input into the audit software program on the auditor's computer, and the auditor can then test those files. Audit software enables large volumes of data to be processed very quickly and accurately. Let's look at a few examples of what audit software can do. One, it extracts a sample according to a specified criteria. Right? It could be random, over a certain amount, below a certain amount, at certain dates, etc. You could calculate ratios and select those outside the criteria. Check calculations, for example, additions, subtractions, anything. Prepare reports, budget versus actual, control reports, variance analysis reports. It can produce letters to send out to customers and suppliers, and follow the items through a computerized system, the trail. Search for underlying relationships and even check for fraud. The main drawback of audit software is that it can take a long time to set up the systems with the client data, and it will require expertise. But if you can sort both of them out, so that's why audit softwares, even sellers of audit softwares, one of their biggest selling points is compatibility, because connecting client data in whatever form it may be into the system, if it's not compatible, is going to be a problem. That is why compatibility is a key critical success factor for audit software sellers. And obviously you need the expertise. What are the benefits and weaknesses of computer assisted audit techniques? The benefits, these force the auditor to rely on programmed controls during the audit, and a large number of items can be tested quickly and accurately once you get the setting up done. CAATs test original documentation instead of printouts. Therefore, the authenticity of the document is more valid. After the initial setup cost, using CAATs are likely to be cost effective, as the same audit software can be used each year as long as the system doesn't change. And it could allow the results from using CAATs to be compared with traditional testing. CAT is in terms of the weaknesses, right? What kind of weaknesses are we exposed to? They will be limited depending on how well the computer system is integrated. Compatibility. The more integrated, the better use. As I said, it takes time to design CAAT's tests, right? Especially if you have to specifically tailor make certain tests. And therefore, it may not be cost effective if the auditor is dealing with a bespoke system, as there may be a lot of setup costs. If the company you're auditing cannot confirm all system documentation is available, then the auditors will be unable to perform the test effectively and to the full scope because of the lack of understanding. And if there is a change in the accounting year or from the previous year, or any kind of IFRS change, anything that the audit software language is using, if there is any fundamental change in the logic of audit, then the audit software will have to be reset and redesigned, and therefore could be even more costly. Those are the benefits and weaknesses of computer assisted audit techniques. That brings me to the second aspect of computer assisted audit techniques, that is test data. Test data can be used by inputting the data into the system and checking whether it is processed correctly. The expected results can be calculated in advance and checked against the actual output from the system. The auditors might include some invalid data in the tests, which the system should reject just to check. It will only be used if the auditor is intending to do a test of controls audit, and it must be considered cost effective as always. Live data is test data are processed during a normal production run. That is when you use live data. Dead data is when you do test data, when you do the testing, which is processed outside the normal cycle, that is just available, which are not currently being utilized. What are the stages involved in using test data? You can gain a thorough understanding of how the system being tested is supposed to work and the controls that are included. You can devise the test data set, which should be a set of data containing both valid and invalid items. The controls in the system should identify the invalid items. You can run the test data, which can be live or dead. Live runs give more reliable results but are more risky to operate, because if something goes wrong because you're parallelly running the operations, then that is why you see downtimes. That is why sometimes even certain websites, payment gateways, most of these kind of operational elements, banking systems, if they are doing an upgrade or if they're doing a test, audit testing, they say between 12 AM to 4 AM the system will be down, just because they are doing a test, and evaluate the results. The final stage in using test data, it is important that the auditor fully evaluates the results of the test data and does further work if unexpected results occur. So gain an understanding, devise the data set, run the test data, evaluate the results. These are the stages involved in using test data. And that brings me to the risks and controls, with a few examples associated to computer assisted audit tests and techniques. The risks and relevant controls: damage to the system as the system is tested to its limits can happen, which so ensure auditors understand the system and have software support. Corruption of the data if test data are not properly removed, so must ensure process for data removal. Ensure process for data removal. Establish when systems can be used with minimum disruption to the business. What kind of examples do we have? Revenue test. Basically, you input an order into a client system that would cause a customer to exceed their credit limit, or input incomplete customer details to see if if there's a trigger, if the flag happens. Purchase test, where you raise an order from a supplier not on the preferred supplier list, or you can process an order with an unauthorized staff ID to check. Then you can have a payroll test. For example, try and set up a new employee up on the payroll system using an unauthorized ID. or you could even try and make employee changes of detail using an unauthorized ID. These are just a few examples, revenue test, purchase test, payroll test, etc., that you can implement as far as computer aided audit testing is concerned. And that marks the end of segment 7, both part 1 and part 2. As you can see, in part 1 we looked at the scope and we basically introduced ourselves to internal audit. We looked at the scope and the structure, what internal audit is, how important it is, and pitched it to contrast it between risk management and also against external audit. And then in part 2, we started by looking at the types of audit. Then we understood the audit process, in which we realized there are 3 stages: planning, testing, and reporting. Then we looked at each of those stages in close detail, and finally we wrapped up our discussion by looking at this modern and very fast, very commonly used audit testing technique, which is computer aided. On that note, we mark the end. As I always say, do keep learning and enjoy the process of learning. Thank you very much, ladies and gentlemen, for sticking with the segment. I hope now, especially after watching segment 7 part 1 and part 2 both, you have a complete understanding of the entire breadth and the entire scope of how internal audit works and what internal audit is and how important it is as management accountants for us to understand, because coactivity maintaining a sound control environment in the strategic case study exam is a fundamental area that the examiner always ends up testing. So as I said, I hope you have gained the sufficient, well, more than the sufficient level of insight using these segments. Keep learning and ensure that you absorb the content very carefully and very smartly. Thank you, ladies and gentlemen.